There we go. Well, everybody, thank you for joining today. Welcome to webinar with BMI and the Small Business Administration. We I know we advertised a different speaker, but you know how government is. She's called away last second, but we got the heavy hitters here to replace her. We've got Jamie Ensley and Jorge Pinon from the SBA. Uh, Jamie serves as senior advisor in the Office of Field Operations within the Office of the Administrator at the USSBA. And Jorge serves as special advisor at the Small Business Administration, where he focuses a lot on policy analysis, intergovernmental relations, and advancing the Made in America initiative, which I'm sure is interesting to our folks as well. So what we're going to do here today is let JP and Jamie go ahead and run through a presentation, but we'll have plenty of time for Q&A. And these gentlemen have said they're happy to answer any questions that you may have with regards to the SBA and how they might be helpful to BMI members alike. So with that, I will turn it over to you, gentlemen.
Great. Thank you to BMI for the opportunity to speak with your members today. Before coming to the SBA, a year and a half ago now, I was in Capital Access up there for about a year, which runs the two main programs, the 7A and 504, becoming down here to field operations. But before that, I was an SBA lender in Atlanta, Georgia for 27 years. And maybe dating myself, but I've helped with some publishing. I think I financed like 3 Heidelberg presses in the past. Those are some of y'all probably familiar with those. I remember talking to my boss that a company had one. I was like, well, what about the depreciation? Because that thing's 100 years old. There's no more depreciation left on that. So it's great to be with y'all today. We know book manufacturers operate in a capital intensive environment where equipment, paper, labor, inventory, and timing all matter. Our goal today is to show how SBA capital tools can support growth, modernization, working capital, and resilience for companies across the book manufacturing supply chain. Whether you're financing a press, adding binary capability, managing receivables, or expanding a facility, there may be an SBA solution that fits. JP, let's go to the next slide. You know, I can't see that. Is it up, JP?
Yeah, it says the screen sharing is starting. It just might take a second. It seems to be
Probably.
Zoom is coughing today a little bit. JP, if it'll help, if you want to email me the slides as well, I can maybe try on my side but
Yeah, it might be easier
I
on there.
made you a co-host, so it should be working, but right now it's, or do you have double monitors, JP? Maybe it's on the other
Hey,
one.
here, let's sit my mistake. What, like, you like, I don't know. Sorry about that, guys.
It's all good.
I think this.
Beauty technology. It works before we start and then stops working after we start. Well, in the meantime, I will let folks know. If you do have questions during the presentation, please feel free to use the chat. And if you don't want everyone to see them, you can send them just directly to me, and I will do my best to make sure that the questions get answered. But hey, look at that.
All right, can you guys see that?
Yes, indeed.
Perfect. Yeah, my computer just crashed, and I was like, no, well, what's happened? But here we are. And, there we go. I'm good. How do I do it? You can do it? Okay. I'll wait for him. Just start the second log. Oh, do I need to, how do I think? Oh, okay, good. Okay, let's see. All right, sorry about the delay.
All good. Thanks.
All right, this is how we help small businesses grow. SBA does not lend directly. We work through private sector lenders by reducing risk with a federal guarantee, which helps lenders say yes more often. And really, what that means is with SBA loans, we guarantee the loans for banks, and doing that allows the borrowers to inject less money, and they get a longer amortization they would for, say, a conventional loan at the bank. Say, for instance, if you're buying equipment on a 7A loan, traditionally, if you go out and get equipment, they may finance it for 5 to 7 years. With SBA, they'll do it for 10 years usually, with the injection of probably like 10%. Conventional banks without an SBA guarantee probably want 15 to 20% of that. So there's savings there. For book manufacturers, that matters because many of your needs involve large equipment costs, uneven cash cycles, meaning your receivables can be, may have long-term receivables or longer than 90 days. Another thing is customer concentration. A lot of book manufacturers have a few customers, which is a customer concentration issue. A lot of banks have issues with that because if one of those customers go away, it could adversely affect the cash flow of the company. So SBA does a guarantee, which encourages banks to make those. The key point is that SBA can help bridge the gap between a good manufacturing business and a lender's risk appetite. Um, Capital access at a glance. This is some new information that we have right now, some changes we've had to the program. One is combined 7A and 504 is now 10 million. Before it was just 5. And as a lender, it was real difficult because if they had a 7A and a 504 loan, you had to figure out what the balance was on this 504 loan and what the balance was on the 7A because it was an aggregate. You could only have an aggregate balance of 5 million. And now they've uncoupled the program, so you get 5 million with 7A and 5 million with 504, which is great. And because good for the lenders, good for y'all, you get far more money. The 90% guarantee. We did that. I've been in SBA for 27 years. We've always had the 90%, I guess, the export thing. You export foreign, if you 10% of your exports is out of the country, then you get like a 90% guarantee under the international trade loan. But the 90%, we did it in the last big recession in 2009, 2010, when everyone was broke as the Ten Commandments and everybody's afraid to expand and banks weren't lending much money back. And then we had it again during the pandemic when, it was a bad time. Nobody wanted to expand and, afraid they're going to die. But this is the first time in my career that we targeted certain sectors, which is manufacturing. But manufacturing should be under that. It's NAS codes 31 through 33 on your tax return. The other thing that we've done that really applies to this group would be the grocery loan. We're doing 90% on that, and that helps cities, especially cities and urban areas that have food deserts where they don't have grocery stores. So this is encouraging banks for guaranteeing their loan at 90% to get them to put grocery stores there, and also agriculture component too. And in rural areas as well, you go to the rural areas, you usually have a family dollar store for the groceries, and this is encouraging the independent grocery stores like IGA and Piggly Wiggly's and things like that to go in the rural areas. And then the other good news, 45 billion in capital delivered in 2025 is the most in the history of the SBA. We just had our 73rd birthday, right, brother? Day? Yeah, 73 years. President Eisenhower established the SBA 73 years ago. The other program, we have the preferred lending program, which lenders have that if they have, we look at several things on there, but if they're a good lender, haven't had a lot of losses and things like that, they can get a preferred lender status, which means that they can underwrite the loans themselves and not have to go to the SBA back and forth to review the loan. They just underwrite it, put it on SBA documents, and we bless it because we trust them so much. The other thing is export 2 to 5 days or not. These are the SBA capital products. I just put a lot of what we offer here. It's just a product map. Not every company needs every program, but it helps to see the range of options available. The 7A program, which is our workforce program, that can be used just about for everything: working capital, equipment, real estate. You could buy a business with it. You could partially buy a business with it. And of course, there's the great silver tsunami coming with the baby boomers are retiring, and we're in tune with that because a lot of the owners, they may not, the families might, the second generation might not want to take over the company. And so what happens? They either have to find us a buyer for the company or they just go out of business. We don't want. The 504 loan program. This is our long-term fixed rate financing. This is especially good, like on the Heidelberg Press, if they'll still buy those, I don't know. But those are, it can be the useful life of the equipment, which with the Heidelberg Press could be the whole 25 years. Since the one I looked at was 100 years old. But it's long-term fixed assets, a building and equipment. I kind of like to compare it to like Waffle House, waffles and eggs with equipment and real estate. With that, though, you get a long-term fixed rate on that. Considering you can, so it's usually structured where a bank will do a conventional first mortgage at 50%. You'll inject 10%, and then a certified development corporation, the SBA, will partner with the bank. They will offer a 40% loan at a long-term fixed rate. And right now, the 25-year fixed rate on that is at 5.7%, a lot lower than prime, which is, I believe, 6.5 right now. So it's a blended rate product. And given that it can go up to the useful life of the equipment fits, 20 years, you could do 20 years on the equipment with it. Conventionally, like we were talking, you may have to put more money down and only do like 7 to 10 years on it. So it makes a big difference. Lower your overhead and help your cash flow with the long-term thing. SB Express, that's those loans are fast. Usually, when they get approval in 3 to 5 days, they only go up to about 350,000. The Made in America is that was what I was talking about, the 90% guarantee for manufacturers and for in the grocery store there. The Mark program, I'll get more into that. This may be something that y'all can use, but it's a revolving line of credit. It's a 20-year line of credit. If some of you probably have lines of credit at the bank, which you have to go every year to renew. This is and when you have to renew it, you usually have to be at a zero balance for 30 days to show that it revolves. Well, this is a 10-year revolver, and then after 10 years of revolving, it flips into a term loan like a 7A loan for 10 years. And then the working capital pilot, those are lines of credit or short-term loans. And then, of course, I mentioned the export working capital program. That's for short-term capital tied to export if you're exporting. And some of you may be sending a good percent of your stuff overseas, and you could qualify for that. But that's for the next one. Oh, the decoupling. That's what I was talking about. So before we had the 7A at 5 million cap and the 504 at 5 million. So now it's 10 million combined. This was one of the most important updates. Growth-oriented manufacturer qualified borrowers may be able to access up to 5 million in 7A and separate 5 million in 504 for up to 10 million combined. The other big change is before the 504 was limited, but now you could do a $10 million, it's unlimited the amount of loans you could do 504 for different purposes. Like you could do a $10 million loan for equipment, $10 million for a building, and then maybe another project you're doing for 10 million. So you could do unlimited 504s now. 7A is limited, but 504 is not. And that happened with the decoupling. So, okay, this is the flagship program, the 7A program. It's the most flexible product. This is our workhorse product. It can support working capital, equipment, owner-occupied real estate. I want to say it's got to be owner-occupied. You got to occupy 51% of the building. You can lease out 49% for additional income, but on the 7A and 504 on real estate, you have to occupy 51%. In the BMI top context, think of funding for digital press upgrades, finishing equipment, warehouse needs, paper purchases, or cash flow support tied to customer growth. You can do a 7A loan for. Manufacturers can start with their local lender or existing banking relationships. You always want to go to the bank you're banking. Usually, most banks have an SBA department, especially the larger banks. You'd probably want to start with them. If they're not interested in book manufacturing, then let me know and we'll find somebody that can help. Let's get in that. And this is the 504 plan. And this again is designed for major fixed assets, especially strong for manufacturers making long-term investments. For a book manufacturer, this is the program to think about when acquiring or expanding a facility. You can use it for leasehold improvements too. If you're leasing the space and you need to, build out the space, but also for the equipment. You all have some pretty heavy-duty equipment. I would consider using a 504 loan for that because of the rate too. It's a fixed rate product, which makes it, during the last when the pandemic happened, a lot of people had 7A loans and there were variable rates, and the rate went up to 5%, and it was like their payments more than doubled. So, that would hurt any company. One thing that we did do during the pandemic, besides the PPP, many of y'all probably had the PPP. Of course, it saved a lot of businesses, but it saved the employees of your company, saved the families from financial hardship. The other thing that SBA did during the pandemic, a lot of people don't know, is if you had an SBA loan, they made your payment for 6 months. You didn't have to make the payment. In hospitality, like hotels, they made their payment because that was a more risky industry, they made their payments for 12 months. If you had a conventional loan, they didn't make your payments. You had to get a forbearance agreement or work something out with your bank. But it was a tough time. Businesses were totally shut down. All right. Next thing. Press. This is the maximum, 500,000. It gives the bank a 50% guarantee. It's a little bit more risky, but it's approval stack. And a lot of banks use this as a companion product when they make a term loan, like if they do a 7A loan for equipment or 504 for the building or for business acquisition. They usually in the form of working capital line of credit. This was a speed and simplicity. It's not the largest product, but can be useful for smaller, faster moving needs. For BMI members, that might include a smaller equipment purchase, a short-term operational need, or a modest revolving line where the timing matters. This is a $500,000 one. So if you have equipment over 500,000, we're up to $1 million. The 504 program, they don't usually use 504 for anything lower than a $1 million budget for equipment. This is the grocery guarantee. Of course, I don't think I missed one. There we go. Made American Loan Guarantee. This was what we launched this last October. This combines a lot of things with, and you would see this on your tax returns if you qualify under this program. And your NAS code on your tax return would be 31 through 33. But this covers virtually all manufacturers, so I'm pretty confident that y'all are in this. No requirement to export, but the bank will get a 90% guarantee making this loan. And this one is on the 7A side. This is a maximum loan of $5 million. The SBA Express. This program is not the core focus of what y'all look at, but I've included it because you may have some overlap packaging. I'm sure y'all maybe do packaging or labeling or printing for food-related channels, maybe grocery stores. So that's, but they get a 90% guarantee in agriculture too, not just grocery store, farmers, ranchers, and farmers. We're looking at more like small meat producers. They have expensive equipment too. Here's the MARC program. This is what I'll tell you about the line of credit. So let's talk about this one for a minute because this can help y'all. MARC is relevant to this audience because it's dedicated specifically to manufacturers that addresses the common challenge, access to reliable working capital as production grows. This is also what we call patient capital. which is there because it's a 20-year line of credit. So it's there to draw on when you need it. You don't have that because the worst thing that happen is here you got a project, you got to draw on the line, and here you are in your revolving line that you have to renew every year, and you got to have a cleanup period. You're in the middle of that and need the money. So this helps a lot. The other thing is, again, I would mention that some of you may have a few customers, and sometimes the banks get a little heebie-jeebies. So you may have 2 or 3 customers. If one of those go away, it really impacts your cash flow. With this, they get a 75% guarantee on this line. If it's less than, if it's 150,000, they get an 85%. So they're real motivated to make this loan. It is a new product though. It just launched October 1st. But it's revolving lines up to 20 years, 10-year draw plus the 10-year amortization. So it flips into a term loan after the 10th year. Now the bank will review this every year. If something happens, a customer leaves or whatever cash flow, then they would just term this out like a 7A loan for 10 years in return. Book manufacturers often need liquidity before receivables come in. Paper purchases, labor setup costs, seasonal production runs, and large customer orders can all create pressure. This product can help with it. Mark is designed to give manufacturers more flexible, revolving support, which can be very valuable from managing long operating cycle or scaling into larger contracts. You may get a large contract, which can give you room to do that. Plus, it's got a 75%, 85 to 75% guarantee on it, which gives the bank comfort to make the loan to you. Flexible lines for growing businesses. These 2 products matter when challenge is less about a building or machine and more about day-to-day operating liquidity tied to business activity. For book manufacturers, a working capital pilot may fit firms carrying significant inventory or receivables. A lot of asset-based lenders only look at receivables. This can look at inventory and receivables, and it has an SBA guarantee on it. If your company has a growing order, the cash is tied up in inventory production or receivables, these programs can help finance that. The export one, that's if you export outside the country, like 10% of your revenue. This would be very lucrative to the bank because they get a 90% guarantee on the loan too. How to get started? Well, first find a lender. I'd look at the bank you're banking at right now. That's the easiest because they want to keep you as a customer. Usually get them deposit everything there. Bring your number. Not only bring your numbers, if you're expanding, we have what's called SBDC centers, and they're usually at the universities, and they will help you with a business plan and projections. When I was a lender, I always loved when the borrower came in with a business plan and projections because it explains the demographics of what they're doing, the customers, how long they've been in business, the experience of the staff there and the owners. A lot of information there, especially if you're going to ask for, a big loan. But you're going to have to fill one out anyway on the 7A. They usually always want to have a business plan. But if you have your homework done ahead of time, going to the SBDC, and it's a free service. They'll help you do your business plan and walk through everything with you. And some are like, a lot of people will just pay somebody to do a business plan. There's a lot of companies that do that, and that's fine. Just make sure that if you do that, that you're involved in the process. Don't let them write the plan for you, because when you talk to the bank for a loan, the underwriter always usually has a bar interview, and they're going to ask you questions about your business plan. And if you don't know the answer, sometimes you don't get approved. The other thing is choose the right product. I went over a lot of them here, but once you go to the bank and you find a lender, they'll have a business development officer that will walk you through, and they will help you make sure you get the right product. The 7As, like everything, it's about anything you can do, buildings, equipment, everything. The 504 is, just real estate and equipment, but it's got a longer term fixed rate. So you want to look at that, and, we grow with confidence. With, the SBA shares the risk with the bank, so lenders can say yes to your future. Support is a life-changing loan that banks make. One of the reasons I got involved with this. So I guess that's the end of my show. So if y'all have some questions, I'm glad to.
Yeah, folks, if you do have questions, please shoot them through on the chat if you can. Just want to say thanks for that presentation, Jamie. As somebody who myself had a SBA 7A loan and paid it off, and it was definitely worthwhile. And I think I
Oh,
actually in grad school did some work for our university's SBDC as well. So,
what work they do? Yeah.
but
Well, well, thanks for doing that. You're
yeah, no.
doing well.
So in terms of the like I know you mentioned like the guarantees and it makes it, obviously if the SBA is backing 85% of it, it's less risky for the bank, so they're more apt to approve it. But eh, how does any of that determine like, how fast it gets approved and what rate you get and that kind of thing?
Yeah, well, that's a good question. The 7A loan and the it's based usually off well, it is off the Wall Street Journal Prime. So I think right now it's not, but probably I think we've lowered it into one. And so it's a percent over that. It's usually the maximum is probably prime plus two and three quarters. Uh, and if you've got good cash flow, you've been around a long time, you may get a really good rate. It could be prime plus one or prime plus one and a half. It's going to be something over prime. The other thing is these lenders usually sell the 7A loans in the secondary market. So kind of grease the wheel with a little greed, and the 90%, when they do that, they get less risk. Plus, when they sell them in the secondary market, they get a little bit more money. So to sell those, so there's some motivating factors for them to make these 90% loans. The rate on the 504 is a little different. The first mortgage is a conventional loan, so we do what and most banks base it off Wall Street Journal Prime, so it's going to be probably a similar rate on the first. But the second part, the 40% of the loan at the CDC is a big change. That rate's very low right now. It's like 5.7%, and that's a fixed rate for the full term of the loan, which is kind of a blended rate. And that's why if you look at long-term fixed assets like a building or a big piece of equipment, it can make a big difference on the useful life. I mean, if it's the useful life of the equipment, and I would imagine a lot of the equipment that y'all use is probably has a long useful life. So I would definitely look at the 504, this kind of better rate along the big convention.
Yeah, absolutely. Well, outside of, the typical, SBA financing and loan opportunities and things like that, um, what what other what other areas maybe could our small businesses that are members look to for the SBA, whether that's um, the Office of Advocacy or, talking to whatever you guys are doing in field ops and that sort of thing, like what else is there that they should be thinking about?
Well, as you know, the SBDC, you know what they do, and they do a great job. And it's all free. And they sometimes they have seminars. So we do those. Our district offices in every state. That's a good place to talk. To get you connected with a lender or the district office of the SBDC. Well, with it. Uh, One of the things that I also like, this is James, by the way, I'm over here. Like, yes, but one of the things that also, as far as like, one of the biggest things that we're working on with the ACU is supply chain. Oh, yeah. Especially with the onshoring. So we have a great resource, the Acorn Short American Portal. So this is a website, free to use website. You can go on the website and search up SBA onshoring portal, or I believe it's onshoring slash I believe like that. But you go on this portal, the port works, you can then give a port report, simply type down what type of supply price. So for this instance, let's say for books, right? Let's say you get like a paper and can't find it. Let's say for you, yeah, it all
J
things best
J
basic.
JP,
And
I'm sorry, you're it's hard to understand you a little bit with
oh,
the
no, you're fine, you're fine. So the
microphone.
onshore portal, you go on this website, and you'll simply you'll connect with domestic suppliers, right? For this instance, like let's say you guys are looking for paper, you just search up paper or you search up some sort of material that you guys use, and it's gonna show you the closest supplier around your area. So, for example, in DC, if you live in DC, it's gonna connect you to someone in Virginia or Maryland. Yeah. And that's in the works, especially because as we are trying to onshore, many folks are having that trouble as far as like, hey, we have relied on other countries to give us our this type of supply. Well, guess what? With this onshoring portal, we can fix that.
So
Uh,
is that
Go
is
ahead.
that is that something our folks like they can register to be
Yeah,
on and listed as
so it's
well?
really is it's yeah, it's supply. Yep, it's free to use. You can simply search up onshoring slash SBA.gov. If not, just search up SBA onshoring portal. Yeah. Oh, and the other thing I forgot to mention is lender match. We have lender match. They want to just look for a lender that they put in what their lending need is, put it in the lender match, and it'll match them up with lender. That is. I would always go to the bank that you're banking with first before you do that. And we also have a onshoring handbook. This onshoring handbook is going to walk you through the process of onshoring. Even if you have it onshore or you simply just want to start a business, that handbook we created it's as part of our onshoring and manufacturing agenda that we have. It's going to walk through the process, right? Like for example, hey, I want to start up a business. It's going to connect you to a small business development center. Any access to capital, this is where you need. Hey, some of the regulatory issues. So I know you mentioned the Office of Advocacy. So the Office of Advocacy, they work with Matt. I'll tell you that. They will find a way to take away that regulatory burden off of you. Uh, just last year, we cut down about $100 billion worth of red tape, regulatory red tape. Yep. And you can simply just give us a call on that red tape hotline. You can go on SBA's advocacy websites, and it's going to give you the number and the email. The email, I believe it is redtape@sba.gov, and just express some of that regulatory issue, right? So, for example, hey, um, we had some sort of issue with EPA in Arizona, and by 3 days, the issue was fixed. That red tape was gone. So we are working very, very strategic and tirelessly over cutting down the red tape so manufacturers can expand and grow. Oh yeah, we got the National Ombudsman's Office too. If there's some other issue, it could be that the business having maybe a tax issue, or it could be a variety of things causing a barrier or whatever. It's on our website, the SBA National Ombudsman. And, he's been able to help with tax issues, all kind of issues. And then, of course, we got the advocacy department for other issues with a lot of that. And one of the examples that the National Ombudsman can help out with is, like you mentioned, the IRS. The IRS was claiming to this manufacturer, like, hey, you owe this much. And the manufacturer is like, no, I have all the documents. I did everything that I was supposed to. Well, guess what? In a span of 30 days, the IRS paid him, gave him a refund. So that's the type of work that the National Ombudsman can do. Even the smallest claim, it's a very funny and great example. This business apparently owed $4 to the IRS. Guess what? Those $4 came back to the manufacturer because it's a problem. OSHA is one of the biggest things. We love OSHA, right? No, we don't. But but OSHA really, that's another thing that we can work with. Like, hey, OSHA showing up to my front door every single day, right? And the National Ombudsman can take care of that.
They work 24/7. I promise you, the National Ombudsman is one of the hardest working people in this agency. Um, but yeah, that's some of the resources that your members can also tap in within the SBA. One of the biggest things that we are also looking into is workforce development. Jamie mentioned the super tsunami. We should be launching a workforce apprenticeship program pretty soon. We're going to launch it in South Dakota, but it's focused around operations management for the younger generation, right? So many of these businesses are dying off, but they don't have the talent to pass it down to the younger generation. So that program's going to focus on operations management, how to take care of stuff, how to be a leader, how to deal with HR. It has all the little things, the details that can make these folks become a business. So
Oh, the other thing that we've done that we've never done really before is the expos. We've been doing the supplier expos for manufacturers. We had one we first started one in Charlotte, then we had one in Detroit, and we just had one in Phoenix. And so we had like 1,000 people came. And what that does, it's putting the manufacturer, because we have like major companies like Boeing and I mean other companies like Walmart and the whole range of large companies. And these small manufacturers are able to have appointments with them, to talk to them about, doing business with them. And it probably would have never happened before to put these people together if not for the expo. And I saw it in person. It was very moving and it was just really interesting. It's not just lending, it's, putting business together. So,
Yeah, I
nice.
mean, yeah. I mean, it sounds like you guys are doing good work, especially working with other offices. Anything specific around working with, USTR and commerce around trying to address some of like the trade and some of the tariff stuff that, can really hamper our folks.
Yeah, and that's, the fair trade is, we've been working on that. And that's the reason we've launched these products that we have, 90%, trying to get capital out. The MARC program, that lowers the financing for small manufacturers. So what really hurt us was um, the 5% increase during the pandemic. That was really painful. Uh, you know, get someone approved and the rate would go up and they, could do the margin they couldn't get approved. So, hopefully rates are coming down and that will help. But, we're offering these capital products to help the small business. Well, I've sat across the table from them. Well, for SBA, I've been in banking uh, for over 30 years and sitting across the table from them. They're resilient. And all of y'all are resilient. Y'all are small business. Y'all are resilient people. You do a lot. And so we just got to get y'all the capital and the products that you need to keep your business really successful. And that's what our goal. Removing barriers and opening up capital, y'all, wherever you.
Awesome.
Yeah.
Well, and thank you for sharing those links. You got the hotline and the onshoring portal are there in the chat. If there are anybody with any questions still remaining, feel free to go ahead and unmute yourself, um, and ask away. Well,
And talk about a lot.
yeah, we need a lot of ground covered for sure. Well. I'm not seeing any, but I'm assuming, gentlemen, if need be, we can reach out to you or Lisa with anything that pops up that we may
Yeah.
need help with, and we really do appreciate your support by having you guys on this webinar. And as I've mentioned when Lisa and I talked before, a large majority of our members are small businesses, so these things
Yeah.
are helping folks, and we are U.S. manufacturers and trying to grow, and we really appreciate all the things that you guys do for us.
I'm happy to help anyone if they have questions, they think of something later, or they have a big need, they can help. We'd be happy to help.
Awesome.
But we appreciate y'all having us on here.
Well, I appreciate you being here, and if we got anybody who There you go. Somebody said they're in the process of buying some new equipment, so they may need to reach
All right,
out. So that's
so we're
perfect.
good. Yeah, I'll help them.
And I'll be sure to let the Heidelberg folks know that
Yeah,
that
that's going.
they were mentioned in good graces.
Okay. Okay.
Awesome. All right. Well, thank you, everybody. Appreciate your time today. And for those from BMI, make sure you continue to look for all our upcoming events. If you're in Canada, we have our Canadian Roundtable. We got our book manufacturing mastered in September. So look forward to that. So thank you, gentlemen, again, and appreciate all the help from our folks at ACG for making this possible. And we'll see you next time.
All right. Thank you.
Thank you. Take care. Bye bye.